Global crude oil prices surged sharply in international markets this week, climbing past the $100 per barrel mark as geopolitical tensions, supply disruptions, and strong demand pushed energy markets into renewed volatility. The sudden increase has triggered concerns among governments, economists, and consumers about the potential impact on inflation, fuel costs, and the broader global economy. Please subscribe, like, and share for more updates. Thanks. The international oil benchmark Brent Crude rose significantly during trading sessions, climbing above $100 per barrel, and in some cases approaching the $110 range. At the same time, the U.S. benchmark West Texas Intermediate WTI also recorded major gains, moving above $100 per barrel after a sharp rally driven by fears of tightening supply. Energy analysts say the surge is being driven largely by escalating geopolitical tensions in the Middle East, particularly surrounding Iran and the wider Persian Gulf region. The area remains one of the world's most important oil-producing regions, and any disruption in production or shipping routes immediately affects global supply levels. A major concern for the oil market is the stability of the Strait of Hormuz, a narrow waterway between Iran and Oman that serves as one of the world's most critical energy transit routes. Nearly one-fifth of the global oil supply moves through the shipping corridor each day. Rising tensions and security threats around the strait have raised fears that tanker traffic could be disrupted, potentially choking off a significant portion of the global oil supply. Market reactions were immediate as traders rushed to price in the risk of potential supply shortages. Oil futures recorded some of the largest single-day increases seen in recent years, with prices jumping more than 20% during periods of heavy trading activity. The surge has also triggered sharp movements in financial markets, with global stocks sliding as investors worry about higher energy costs fueling inflation and slowing economic growth. Oil producers and exporting nations are now under pressure to increase supply in order to stabilize prices. The oil-producing alliance known as OPEC, along with its partners in OPEC+, is closely monitoring the situation. Some analysts believe the group could consider adjusting production levels if prices continue rising too quickly and threaten economic stability. Meanwhile, governments in major energy-consuming countries are evaluating possible emergency measures to control the impact of rising oil prices. In the United States and several European nations, policymakers have discussed the possibility of releasing crude from strategic petroleum reserves to ease supply pressures and calm the market. The surge in crude oil prices is already having ripple effects across global economies. Fuel prices at the pump are rising in many countries, increasing transportation costs for businesses and consumers alike. Higher fuel costs also tend to drive up the price of goods, including food and manufactured products, because shipping and logistics become more expensive. Energy economists warn that if crude prices remain above $100 per barrel for an extended period, it could slow global economic growth. Industries that rely heavily on fuel, such as aviation, shipping, and trucking, may face rising operational costs, while consumers could experience increased living expenses. Despite the surge, some analysts believe the oil market could eventually stabilize if supply disruptions ease or diplomatic efforts reduce tensions in key producing regions. However, if geopolitical risks intensify or shipping routes become restricted, oil prices could climb even higher in the coming weeks. For oil-producing nations, the price spike could lead to increased revenues, but for most importing countries, the surge represents a growing economic challenge. As the situation continues to unfold, energy markets remain highly sensitive to political developments, supply changes, and global demand trends that will ultimately determine the direction of crude oil prices in the months ahead.